Macro thoughts, as I've said before, crude oil price target of $32 a barrel. Goldman Sachs is talking about it falling below 40 now. I'd like to think I was one of the first to call that. And I follow a chap called Lee_Sachs. This is where crude oil futures settled yesterday, $44.40, up 0.38%. And increasingly, as I said, I think it's a Wizard of Oz moment. I don't think there's anyone behind the curtain. Global government bond yields, take a look, and we've continued to see a spike higher in these. We're in a price disequilibrium, which was achieved by these lashings of free money. Stimulus is now being withdrawn. Crispin Odey says drunken markets are ready to topple. The credit cycle boosted by loose monetary policy has peaked, and there's a widespread slowdown in the auto, commodity, industrial, and retail sectors, Odey wrote in a letter to investors. Unlike previous dips since the financial crisis, central banks aren't responding by printing more money. The chances of car crashes everywhere are rising, he said. Enjoy the hot summer. Repeating a similar statement last month. Goes back to what I wrote on the 12th of September, mirrors on the ceiling, the pink champagne on ice. And I said a lot of risk calculations are based on value at risk, VAR. Essentially, you overlay a volatility measure over the portfolio, you calculate how much money is on the line. Central banks have suppressed volatility, therefore in real terms, investors are now holding bigger positions at these currently artificially suppressed levels. If volatility spikes, I said positions are going to be reduced en masse. Or to put it another way, and borrow the lyrics from the Eagles song Hotel California, mirrors on the ceiling, the pink champagne on ice, and she said, we are all just prisoners here of our own device. Last thing I remember, I was running for the door. I had to find the passage back to the place I was before. Relax, said the night man. We are programmed to receive. You can check out any time you like, but you can never leave. And I said then, which was September. We're now in July. What is clear is that we are at the fag end of the party. And I also said then, this is going to pop, and when it pops, the wizardry won't work anymore, and at that moment there is going to be one heck of a move. Take a look at this ratio of VVIX, expected volatility, to volatility trades, near highest since 2006. According to Holger, that might be signaling a market surprise in the making. 10 years ago today, a big downgrade kicked off a crash in subprime mortgage bonds, you will remember. Have a look at the S&P 500 chart. This has had a good run. I think it's time to book your gains and take off for the summer. Bank of Japan made itself clear on Friday that the 0% target for 10-year JGB bond yields, the yield curve control, they like to call it, would be aggressively defended, and that's why we've seen a move higher in dollar yen.